Labas rytas visiems. Jau 10 valanda.
Good morning. It's 10 sharp already. We are recording this meeting, so maybe we should start on time. Thank you very much for joining this special meeting of decarbonization in agriculture and forestry. I'm advisor to the Minister of Agriculture. And just like it was mentioned in the invitation, we will have representatives of the European Commission and OECD presenting their interim report on transition to climate neutral economy. And they will focus today on agriculture. This is already the second meeting of the kind with the experts participating in the project. Our first meeting took part on the 27th of January this year, when OECD and European Commission experts presented us with initial findings, and they also shared the good practice of other OECD countries. And today we will listen to their presentations on some results stemming from the project. You will also have a chance to ask questions and to comment. Before I give the floor to our guests, I would like to share a few practical details with you. First of all, this meeting will be taking place in two languages, English and Lithuanian. You have an icon with a white globe. Please choose the language that you would like to listen to. If you do not see the icon with the white globe, which says interpretation, you need to update your Zoom application. As usually, this meeting is also being recorded, so you will be able to listen to this presentation later on, to the recording of the presentation later on. And please keep your mics off at all times when you're not speaking. If you want to say something, to comment, or to ask a question, please raise your hand. And when you are given the floor, please introduce yourselves just to tell us which organization you represent so that our guests know whom they're talking to. That would be it from my side. And now I'm giving the floor to OECD and European Commission experts.
Hi, welcome everyone. Good morning. Thanks for being here with us. I'm going to quickly try and share my screen. And I hope this now works. Can you see the screen?
Not yet.
Now? Do you see the presentation?
Yes.
Sorry, I'm in a different room at the office. I need to figure out how it all works. I'm glad that it works very well. I hope you can all hear me all right as well. Let me again take the opportunity to say thank you for coming this morning. I think it's great to have all of you participate in these sectoral workshops. The first round that we held in January and February, some of you may have taken part in then already, were very helpful for us sort of in determining the direction that we're taking with our analyses. It was very helpful to hear from all of you what your views were on agriculture and forestry sector decarbonization. And we'd like to take the opportunity to now go through some of our emerging results with you. So the way that we'd like to do this today is we'll start off with a presentation, and we'll go relatively in depth on our results. First, we'll offer a brief reminder of the project background and an overview of how the project is structured for those of you who were with us in January and February in the agricultural sector workshop then. Some of these slides may look familiar, but we thought nonetheless it'd be good to have a refresher. We'll then dive into some economy-wide modeling results and try and sort of pass out some of the key findings from our economy-wide modeling for agriculture and forestry, before then really looking in detail at sort of our sector-specific findings. And then at the end, we should have at least 45 minutes, probably even longer, for any questions that you may have. And there we'd really like to hear sort of, from your perspective as, the real experts on agriculture in Lithuania and forestry in Lithuania. What are your key insights, key takeaways from our presentation, and what might we have missed? So to start off and provide you a brief introduction and overview of the project. As you can see from historic emissions data in Lithuania, greenhouse gas emissions have kind of stalled since 2005, meaning that, although some sectors, for example, in the energy industries, have reduced emissions quite significantly, other sectors have also increased in emissions, for example, in transport. Now, this per se isn't an issue, except that the EU has set a very high, ambitious new climate target, wanting to reach net neutrality by 2050 or net zero emissions, where the amount of emissions that remain are balanced out entirely by the amount of emissions removals through, for example, land use and forests. And in order to reach this, have set an interim target of reaching 55% emissions reductions by 2030. In line with this, they have proposed a relatively comprehensive policy package called the Fit for 55 proposal, or Fit for 55 package, which includes, for example, a proposal to increase the ambition of the EU ETS from 42 to 61% reduction by 2030. And it also includes new rules for non-ETS sectors throughout member states through the EU effort sharing proposal. And here, what the proposal states is that specifically for Lithuania, from a previous target of a 9% reduction by 2030 with a 2005 baseline, the new target would increase to 21%. And that's a pretty sort of stark increase and requires quite a lot and quite a large policy effort to meet. The good news is that the Lithuanian government is entirely up to the task and has already increased its national climate change ambition through the National Climate Change Management Agenda, which aims for 100% emissions reductions by 2050 and sets a commensurate sort of 2030 mid-range target for a 70% reduction, which would amount to 30% when compared to 2005 levels. This includes a reduction target of 25% for non-ETS sectors, which, as you can see, already surpasses the 21% that is proposed in the effort sharing regulation. So this is, these targets should be applauded. They're highly ambitious and well in line with the EU's overall ambition of reaching net neutrality, and also in line with the Paris Agreement's temperature targets of limiting global warming to 1.5 to 2 degrees Celsius. However, in order to meet them, new policies are needed and more policy ambition is needed. And what really is key now for the next sort of 10, 20, 30 years is to develop policy packages and implement them in full that can meet these emissions reduction targets. As you can see in this graph, if we're looking at the total emissions projected up to 2040, according to the current National Energy and Climate Plan, and then in the yellow X and the red triangle, the various targets set both by the NCCMA and by the effort sharing directive target, we can see that more policy ambition will be needed in order to meet these. And this is where this project comes in. So Lithuania has already submitted a national energy and climate plan to the EU, and this national energy and climate plan is due for an update in 2023, so next year. And there's a large process by which the Lithuanian government is consulting with stakeholders, but also drawing other insights and inputs into what exactly this new updated national energy and climate plan should entail as far as sectoral and economy-wide policies go. And our project aims to support this process, providing policy recommendations for how Lithuania can reach its climate targets and decarbonize by 2050. This includes a collaborative effort across 4 of the OECD's directorates, myself from the Environment Directorate, we have colleagues from the Economics Department, colleagues from the Center for Tax Policy and Administration, and also colleagues from the Directorate for Employment, Labor and Social Affairs. And together, we're carrying out a number of different analyses that inform this project. So the analyses are really spread over a couple of different aspects. One of them is to carry out a policy stocktake to really understand what exactly Lithuania is currently doing to reach its climate targets. We will also carry out a modeling exercise to understand, under various different climate policy scenarios, first of all, are they ambitious enough to reach decarbonization targets? And second of all, what is the economic impact that these measures would have, considering, a global level computable general equilibrium model. The Center for Tax Policy and Administration is also carrying out an analysis of the carbon pricing landscape in Lithuania, providing sector-specific insights on, what fuels are priced at what levels and where more ambition could be seen. The Economics Department is carrying out an assessment of financial needs, particularly for infrastructure on meeting decarbonization targets. And finally, the Employment, Labor and Social Affairs Directorate is carrying out a distributional analysis that informs, what is the impact of different climate policy scenarios specifically on households, and perhaps also how this impact can be mitigated through distributional policies. All of this will come together in a final report, which we're preparing now. And we hope to be able to launch at some point early next year. And in the meantime, there's the so-called Interim Report, which includes a lot of our analysis with a specific view to informing, policy recommendations or policy reforms to 2030. And in our first round of workshops held in January and February, we had a look at what good practices around the OECD and the world were for reaching sectoral emissions reduction targets. And now we'd like to share with you our insights directly from our analysis. So I hope that was a good refresher for what exactly our project aims to do and what the content of our workshop today would be. So I'll go ahead now and present to you the findings from our modeling exercise, which was an economy-wide model of Lithuania, but also of the whole world. So specifically, we were looking at Lithuanian climate policies, but the model is global in scope. So we also look at sort of global trade impacts and all of this. So it's a global computable general equilibrium model to assess the impact of decarbonization policy scenarios in Lithuania. And we use as a reference scenario or a baseline a scenario that assumes that all NDCs submitted to the UNFCCC in their current form are implemented in full. So this isn't a business as usual case. This is a already quite high ambition scenario. But what we were interested in the modeling is to understand what the ambition gap is. So assuming that the current plans that already exist are implemented in full, what else needs to be done to be able to make up the gap? And in order to do that, we model two specific scenarios on a 2035 timeframe. The first, which we call Fit for 55, assumes that the rest of the EU, so all countries within the EU apart from Lithuania, reach the 55% reduction target by 2030 through use of both the EU ETS, but also a non-ETS carbon price. In Lithuania, we implement only the proposed excise duty amendment, which would increase excise duties on a number of fuels or on pretty much all fuels gradually up to 2025. And then from 2025 also includes a carbon pricing component starting at 10 euros per ton and then rising to 60 euros per ton by 2030. So this scenario really looks at, if basically what happens if all EU countries try and meet the 55% reduction target on their own terms. So without some sort of broad overarching EU framework apart from the already existing EU ETS. The ETS2 then says, well, what happens if, for example, the ETS2 that is currently being proposed in the Fit for 55 package comes to fruition? And this would create a new emissions trading scheme for the transport and building sector in the EU. And so we really want to compare between the two. First, what is the ambition of Lithuania's current proposed climate policies? And second, what would a decarbonization or what would emissions reductions trajectory look like if the Fit for 55 package is implemented in full? Looking beyond 2030, we also look at policy trajectories to 2050. And here we implement a scenario of high climate policy ambition as reflected through a very high carbon price trajectory. And really what we're interested in the 2050 results is to look at, how high do carbon prices need to get to try and reach net zero? And, where are sort of hard to abate sectors, according to the model, where even high carbon prices aren't enough and perhaps technology innovation is needed. So before I present to you the results from this, there's a couple of very important model assumptions that I'd like to go through. As always with economic modeling, and especially with these sort of global CGE models, it's a simplified view of the world. And so, for example, in our model that we use for this project, we assume that only current technologies are available and there's no sort of new technologies that come onto market. So that means technologies like carbon capture and storage or hydrogen are not actually available, even though we know today that it's very likely that in the next 10, 15 years, they achieve certain cost reductions. However, we do implement continued cost reductions for renewable energy and other already on the market technologies to sort of allow for some kind of realistic process whereby as the renewable energy sector expands, costs continue to decrease. We also assume steadily increasing energy efficiency gains and renewable penetration. So there is definitely a preference here for sort of a decarbonization, autonomous of any policy interventions. The other thing to be wary of when considering the model results is that we only consider combustion-based CO2 emissions. So the model can only price combustion-based CO2 emissions, not process-based emissions or other greenhouse gases. As such, process-based emissions in the industry sector and non-greenhouse gas emissions, for example, in agriculture, are not priced. And this results in higher carbon prices than you would otherwise expect. And it also results in slightly lower greenhouse gas emissions reductions than perhaps otherwise would be expected. So, think of the results sort of as a lower bound. And then finally, the economic impact results don't include the economic benefits of avoided impacts, nor do they include co-benefits such as increased health due to lower local air pollution or similar. Now, to briefly present to you our results to 2030. Under the reference scenario, we can see that Lithuania's economy does reduce its emissions quite considerably. However, it's not enough to meet the new targets set in the NCCMA. We see that it's close. We're above 65%, but not quite yet at the 70% that the NCCMA sets. And particularly emissions in industry and transport remain relatively stable, despite considerable reductions in power and heat and in households. If we then implement our policy scenarios, both the Fit for 55 policy scenario where Lithuania implements its excise duty amendment, and the ETS2 scenario where the EU-wide ETS2 is implemented, are enough to reach Lithuania's 2030 targets, or at least almost. The Fit for 55 scenario reduces emissions by 27% with respect to 2005 levels, and the ETS2 by 28.5. So they're very close in ambition. And if we look at change in primary energy supply with respect to reference scenario in 2030, we see that the ETS2 is slightly more ambitious. It reduces fossil fuel energy use a little more and increases renewable energy supply a little more as well. But in general, they have very similar results. They're also both not particularly costly for the economy. So here in this chart, you see real changes in GDP under planned policies, but with respect to reference scenario. And if you translate these into annual growth rates, this only implies a moderate slowdown of about 0.04% in both cases. And in addition, this doesn't take into account avoided damages or co-benefits. So actually, perhaps the net economic impact might be positive rather than negative. Despite these low GDP effects, output does shift quite considerably throughout sectors. And unsurprisingly, moving from emissions-intensive sectors such as air transport, gas power, or crude oil to renewable energy sectors, solar, wind, and electricity distribution. The same is true for employment, where employment patterns shift from petroleum products or non-metallic mineral mining to electricity production and distribution. And now I'd like to pass on to my colleague Asia from the Economics Department to present you the results to 2050.
Good morning, everyone. Thank you, Killian. Thank you for giving us the opportunity to present our results. So continuing on with the modeling exercise that we undertook. So looking beyond 2030, the scenario that we wanted to investigate is a high ambition scenario whereby the carbon price implemented in Lithuania increases at a rate of 3.4% and reaches 400 US dollars per ton of CO2 by 2050. As Killian said, the fact that we don't include process-based CO2 emissions, CO2 emissions, and because we don't have any assumptions on innovation or new technology that can come in to further reduce emissions, then we get a price that is quite high. And with that in mind, next slides, please. So this policy instrument, the carbon price that is implemented in Lithuania, would lead us to quite significant reductions in CO2 emissions that amount to around 83% lower emissions with respect to 1990 levels and 60% less emissions with respect to 2005. And but we see that while over the time power and heat almost fully decarbonize, along with the services sector and household sector, industry, and to a lesser extent transport remain. Emissions from industry and transport reduce by a much lesser extent. So to show that these are quite hard to abate emissions. Next, please. When it comes to energy generation, what happens in this scenario is that, for instance, wind generation would increase twofold in 2050 with respect to 2030 levels, and to a similar extent, solar power. On the other hand, gas, coal power, and other renewables, which include biomass, will experience a considerable decrease. Next, please. The economic costs, again, similar to the findings for 2030 time horizon, the economic costs are minimal. When translated to annual growth rates, there's a slowdown of about 0.03% annually. And again, because we don't consider co-benefits and avoided damages, this could even be of a lesser extent. So that's good news for us and for Lithuania. When it comes to production reallocations, well, because the economic costs or GDP reductions are quite limited, although GDP is not going to change by much, what is going to change is the sectoral configuration in Lithuania, and we see that there is a considerable reduction in energy-intensive industries and a shift towards the electricity sector, unsurprisingly so. And we see that for agriculture, there isn't much happening. Across skill types, so skilled and unskilled labor, we don't see significant differences with respect to the reference scenario between the two classes of labor skill levels. Next, please. So what we wanted to do is to set these results in terms of greenhouse gas emissions reductions As we said, in our model, we only can price combustion-related CO2 emissions. But if we are to look at them in the wider picture of all of greenhouse gas emissions, what we see is a reduction of emissions that goes to 65% with respect to 1990 levels. And so this is not bringing us anywhere close to a net zero outcome. And so the conclusion here is that carbon pricing on combustion related emissions is not going to be sufficient, and we have to call on other policy levers to help us bring down greenhouse gas emissions. What we can look into is the role of carbon sinks in helping in bringing down additional or adding additional emission reductions. If we follow historical trends, we know that carbon sinks contribute 5 gigatons annually in reductions, which would bring us to 73% with respect to 1990s. So with carbon sinks, we only reach 73%, and therefore further reductions would need to come from technology improvements in non-greenhouse gas emissions and process-based CO2 emissions. And this includes enhancing carbon sinks, but also investing in technological improvements for industrial emissions, for freight transport related emissions, and innovation in agriculture. Next slide, please. So the overall conclusion from the modeling exercise is that one, for meeting 2030 targets, it is important that the excise tax amendment is implemented. And this will, as we saw, it will bring us to meeting the 2030 targets. The good news is that even if we are implementing quite ambitious carbon pricing, economic costs of this climate policy are low. We also saw that carbon pricing alone on combustion-related emissions is not going to be enough. And what is going to be key is innovation and technology diffusion in industry, transport, and agriculture. This is going to be central to meeting, or decisive for meeting net zero targets. And that carbon sinks are going to also need to be enhanced because they do bring down emissions, or they have the potential to bring down emissions quite considerably. And with that, I conclude this section and pass the floor to Killian.
Great, thanks so much, Asia. And I think, really for me, what's key for the agricultural sector from the results, given that we're not pricing non-greenhouse gas emissions, and that's the bulk of the sort of agricultural sector and forestry sector emissions are non-CO2 greenhouse gases. I think what's really key is that, the agricultural sector in Lithuania has a key role to play to enable these additional emissions reductions beyond carbon pricing in the other sectors, and especially also in balancing out emissions through sinks. That being said, I think it's really important to look at what's already at play in Lithuania as far as policies go, and so we carried out a policy stocktake in collaboration with the Ministry of Environment and the BGI consultants who had been asked to go through current plans and policies and understand their sort of net effects. And what we find is, first of all, on an economy-wide policy level, there are a number of existing horizontal policies that sort of aim at really mainstreaming the climate policy considerations throughout government decision-making. For example, by integrating greenhouse gas emissions reductions evaluations into the legislative process, or mainstreaming climate change within educational process, also extending the scope for green procurement and raising public awareness. So these are really key. And in addition to that, there's this planned excise duty amendment, which we focus our modeling around because we think that it really has a huge potential to make a big impact on emissions to 2030. And the planned excise amendment includes gradually increasing excise taxes on all fuels except for natural gas. And there are a number of agricultural exemptions. However, these are quoted. So up to a certain number of liters of fuel, agriculture is exempt from increased excise duties. But after that quota has been met, I think it's an annual quota, higher excise rates apply also in the agriculture sector. And in addition to these excise duty increases, from 2025, the policy proposes to introduce a carbon price component on all fuels, starting at 10 euros per ton and of CO2 and rising to 60 by 2030. And ETS installations, so installations that are covered by the EU ETS, are exempt from this in order to avoid double pricing. In addition to these economy-wide policies within Lithuania, there's obviously the broader EU context. As a EU member state, there's always also EU-wide policy frameworks to consider. And here the Fit for 55 package currently being negotiated and discussed at the EU level is key. And this includes the already mentioned increases in the ambition of the ETS, but also the potential of a second ETS coming in for the buildings and transport sector. But it also includes changes to the energy tax directive, which my colleague Dirk will present a little bit more on later, but also energy efficiency targets, renewable energy targets, a carbon border adjustment mechanism, targets for land use change in forestry, alternative fuels, aviation, shipping, etc. So on an economy-wide level, there's a pretty comprehensive policy framework already in place, and especially the planned excise tax amendment would make a big difference. At least that's what our modeling results show. Considering the agricultural sector specifically and in more detail, what we find when looking at emissions from agriculture historically is that emissions decreased significantly from 1990 levels and then sort of plateaued. And this is in keeping with emissions trends generally in Lithuania. However, what we see is that emissions from livestock actually continue decreasing, whereas emissions from crop fertilizing are increasing. And this is mainly due to reduced stocks of livestock and versus ever more intensive fertilization. We also see, and this is perhaps a slightly worrying trend, that since 2011 and 2012, total removals from land use change and forestry have been decreasing. And this is a trend that is key to reverse if net zero emissions are to be reached. Perhaps one final point here that is important is that fossil fuel subsidies in agriculture actually already make up almost 30% of fossil fuel support in Lithuania, despite taxes on diesel use in the sector tripling between 2015 and 2020. So this is sort of it's very sector-specific insight that shows that there is quite a lot of scope for policy ambition in agriculture, and obviously, though, this needs to be considered with sort of distributional concerns as well. So if we consider the targets that the NCCMA sets for the agriculture sector, it targets an 11% emissions reduction by 2030 and a pretty stark increase in the absorption capacity of the land use change in forestry sector up to 6.5 million tons of CO2 between 2021 and 2030. In agriculture specifically, it aims to reduce nitrogen-based fertilizer use, increase sustainable management of manure and slurry, double the area of organic farming, and also use 50% of pig and cattle manure for biofuels. And in the forestry sector, it looks for an increase in forested area of 35% by 2024, increased in grassland areas, using agricultural area for biodiversity and restoring wetlands, which are particularly effective carbon sinks. So if we consider all of this and we look at the policy levers that are currently in place under the NECP, we find that there's already ample financial incentives for expanding forests and for implementing sustainable farming practices. For example, this includes financial support for the restoration of forest areas, aiming to reach this 34% target, but also compensation for establishing long-term climate commitments, such as reducing nitrogen fertilizer use, which are funded as part of the EU's common agricultural policy, which is also being updated currently. So combined with pretty strong regulatory policies and particularly information campaigns, there's a strong emphasis in the NECP on, specifically the agriculture sector, carrying out workshops and doing information campaigns to make agriculture sector stakeholders and farmers in particular aware of the financial incentives available to them and the benefits of sustainable farming practices. So together, this really implies that there's a strong policy mix already available within the agriculture sector in Lithuania. From this, though, we still would recommend that excise duty amendments in Lithuania remain high, and especially with 30% of all fossil fuel support landing in the agriculture sector, although quotas will be tightened through the proposed amendments, particularly to the excise duty, more ambition could be shown here. In addition to this, at some point, it may also be useful to start thinking about a greenhouse gas emissions price or some kind of emissions pricing scheme for the agriculture sector, specifically, for example, on fertilizer use and emissions resulting from this. Now I'd like to pass on to my colleague Dirk from the Center for Tax Policy and Administration, and he'll present to you the results of an analysis of the carbon pricing landscape in Lithuania.
Okay, thank you very much, Kilian, and hello to you all. As Kilian said, I'll talk a little bit about the carbon pricing landscape in Lithuania in the agricultural and fisheries sector. Sorry, agriculture and fisheries, not forestry. And since it was already made, I will make the main point ahead of my 4 slides here, that most of what comes out of this sector in terms of greenhouse gases is methane and nitrous oxide, and that isn't priced does have a big effect, and it's the basis of all policy or most policy recommendations that we have to give. But so in detail, what we can say on the landscape, Kilian, if you could show me the next slide. Thank you. So the first, a bit of context how we go about this. What you see here in the figure on the left side is that we look at the prices in 3 components. We look at the emission permit price, i.e. the allowances that are traded on the EU ETS, which is the relevant policy instruments or relevant policy here for Lithuania. We look at carbon taxes, which are currently being discussed in Lithuania. And we also look at fuel excise taxes, since they basically have a direct relationship from the tax to the carbon emissions in the tax. So they function effectively as a carbon price. And of course, in Lithuania, what's relevant here are excise duties on several fuels. And what we do with these calculations, or the outcome of these calculations, is what we call the effective carbon rates. And it's called effective carbon rates because we do not only look at the rates that are applied to certain emissions, but we also look at which emissions these rates are actually applied to, also in the sense of, what are free allowances that are given out? What are tax exemptions that have to be included in these calculations? So we look at what we call the base, i.e. the emissions that are really covered by an instrument as opposed to nominally covered. And then we see with which rates these emissions are covered. Once we have this landscape, we compare it to benchmarks, and we compare them to compare the prices on the emissions where we know that they are priced to a benchmark of 30 euros per ton CO2, because this is consistent with a price path that leads to carbon neutrality in 2030, and also to a benchmark of 100 euros per ton. And with that, to the next slide, to get a bit more concrete and give you an overview of how the agriculture sector in terms of CO2 relates to the other sectors. And on the left side in the bar chart here, you see that on average, and that's a weighted average over emissions, a ton of emissions is priced at 17 euros. And again, we're talking about CO2, so the agricultural and fishery sector makes up only like 2%. So the share in the GHG emissions of Lithuania that the agricultural and fisheries sector has is only 2%. But as you see on the right side, we are only talking about CO2 here, which only is 6% of all emissions from the agricultural and fisheries sector. And as you know, both Kilian and Asya already mentioned, most of the emissions, greenhouse gas emissions from the agricultural and fisheries sector are methane with 56% CH4 and nitrous oxide with 38%. Nevertheless, since we talked about the carbon pricing or the landscape of carbon pricing here for CO2 emissions, I will give you a bit more insight into the 6% where we actually can say something on how it is priced, since it is priced, on the next slide. And what you'll see there on the right here in the figure is which fuels cause the CO2 emissions in the agriculture and fisheries sector. And you see by more than 50%, we've got diesel causing greenhouse gas or CO2 emissions rather, and is consistently priced at 22.5 euros per ton through a fuel excise tax. And the fuel that comes after that is natural gas, which is hardly priced at all. And these are basically the two fuels that matter. But again, this is only within these 5% plus 1% that I showed on the pie chart in the slide earlier. And of course, these excise duties could be higher. For example, if you compare that with the excise duties that are paid on fuels in the transport sector overall. And also the 22.5 euros obviously do not reach the 30 euros benchmark that we apply here. So to conclude on the next slide, main point here again is the greenhouse gas emissions that are relevant in this sector aren't covered by the current pricing mechanisms. And they wouldn't necessarily be particularly strengthened by the draft law that's currently being discussed in Lithuania, or the implementation of the EU ETD, so that's the energy tax directive. But the implementation of the revision of that directive wouldn't necessarily strengthen the pricing of these gases either. So our recommendation, as Kilian also alluded to, and I think Asya as well, would be to look into how to price these gases, talk about taxes on fertilizer or alternatives, like for example, what's being done in New Zealand, where you have I think it's a per head of livestock tax based on the methane that comes, or that is a result of holding that livestock. So far from me, I think back to Kilian, right?
Yes, Dirk, thanks so much. And so, as Dirk rightfully pointed out, agriculture, in comparison with other key sectors in the decarbonization world, has a special place, given that it's really non-CO2 greenhouse gases, and these are often not priced in sort of general pricing mechanisms. So, what I'd like to do and Asya, my colleague Asya, will chime in with some information on sort of financial needs for enabling this. I'd like to look at, how can we really look at those hard to abate other greenhouse gases? What are the, policy frameworks available? And so, first of all, there's a number of mitigation technologies that are available for agriculture. For example, anaerobic digestion or feed changes for livestock. There's also talks of a sort of methane vaccine for livestock that just reduce the direct livestock methane emissions. There's also, within sort of farming practices, various different sustainable practices that have relatively high mitigation potential at low costs. For example, fallowing histosols. So this would be, stopping the sort of production on organic soils and allowing them to draw carbon from the atmosphere and sort of store it in the soils. However, overall, the mitigation potential here is somewhat limited. So reaching sort of the super stringent CO2 emissions reductions that are required will likely not come just from implementing sort of fallowing histosols, at least considering the need to also remain competitive in the agricultural sector. And this can be seen, for example, in the marginal abatement cost curves for methane being the steepest across all sectors in the agriculture sector. That means that it's, this is really hard to abate here. And so incentivizing an uptake of technologies and further innovation will require both direct innovation support and appropriate price signals. This isn't going to happen on its own. And so here, what I'd like to do is briefly go through an example from another country in New Zealand, because New Zealand is one of the first countries to have proposed a carbon price scheme in the agricultural sector. And I think that sort of as an OECD good practice example, this is really key for other countries, and the lessons learned here will be key going into the future for the agriculture sector. So the proposal would price livestock emissions at the farm level from 2025, and I think that Doka was right in saying that the emissions are sort of calculated, but per head of cattle or per head of livestock at least. Here there's currently a feasibility study being carried out with a sort of pilot phase, and should the feasibility study show that actually pricing emissions at a farm level is difficult, it would then an alternative option would be to price emissions actually at the processing level. And the idea here would be to have a transition period for building reporting capacities first. Farms have not had to report their greenhouse gas emissions so far in New Zealand, and so there would be mandatory farm reporting at a farm level of emissions by 2024, with a pilot reporting scheme for a range of different farm types being implied. And then by 2025, what is also proposed is that the manufacture and import of nitrogen fertilizer be integrated into the overall emissions trading scheme that already exists in New Zealand on other emissions. And there would be the provision of near free allowances if agriculture more broadly enters the ETS. The ETS in New Zealand also already includes forestry, and thereby sort of provides a financial incentive for enhancing sinks. And I think that this sort of combination of pricing livestock emissions at the farm level, but especially also pricing nitrogen fertilizer production emissions and import emissions as part of a broader ETS that also includes incentives for enhancing sinks is a really key sort of example of how carbon pricing can play a role in agriculture, even though agriculture has a slightly different sort of emissions scope than other sectors may do. Now, in order to enable emissions cuts, what's still very key in agriculture, and in order to enable the price signals to have their due effect, what's key is to have some kind of innovation and technology diffusion as well. And to 2050, we still have quite a lot of time for the big sort of technological breakthroughs. And although we shouldn't put all of our eggs in that basket, I think it's also key to sort of have a policy framework that allows for further innovation. And current financial incentives to adopt sustainable agricultural practices that already exist in the framework, policy framework of the NECP are really key to enable technology adoption and diffusion, and should definitely be continued and strengthened. But more targeted efforts in particular sectors could also prove critical for further deep innovation. So for example, ammonia production, which is key for fertilizer, currently relies on hydrogen, which is produced using natural gas generally, so that's called gray hydrogen. And so here green hydrogen could play where hydrogen is instead produced using renewable energy, could play a key role. And I know that Lithuania has a key focus on green hydrogen already, but specifically more in the industry as sort of a fuel for industry, and also in decarbonizing hard to abate freight transport emissions. But here sort of more targeted efforts on supporting cost reductions, for example, in electrolyzers would be key. But it's important to consider that Lithuania remains a small market. And so deep innovation may not be its sort of primary focus or the most, the best thing to focus on. And instead, it's really key to ensure a policy framework exists for technology adoption. And so with this, I'd like to pass on to my colleague Asia, who will give you a little bit more of insight on how exactly sort of financial policies can be structured to enable this sort of investment in innovation and technology adoption.
Thanks, Gillian. So what I'm going to talk about is how the public sector can play a role both in providing funds in an efficient manner, but also how it can help bring in private sector investments, so scale up climate finance for the including for agriculture, through different risk sharing mechanisms and other incentive mechanisms. And as we said, I mean, for the agriculture sector, technology diffusion is going to be important, which means that there's going to be considerable need for financing. And so this is what I will discuss. First of all, in Lithuania, what we've seen is that public sector has relied heavily on distributing grants and subsidies to fund investments. Well, this is well and good, but it has the potential of undermining incentives for private sector involvement and even crowding it out. For instance, over the last programming period for EU structural funds, Lithuania spent around 6.3 billion in European structural funds towards climate mitigation investments, and this represented actually 60% of its total public investment in that period, which is quite significant. Other players in the climate finance landscape for Lithuania have been multilateral banks such as European Investment Bank and the European Bank for Reconstruction and Development, who have contributed around $2 billion over the same period, 2014-2021. Well, these are significant numbers for investment. There is still a considerable gap that needs to be filled in by the private sector. So first, what I'm going to talk about is what the public sector can do as a fund, as a source of funding, and as the one that sets the policy framework for investment, and then how it can bring in or incentivize private sector to play a role. So next slide, please, very quickly. Of course, first and foremost, what is important for anchoring investor expectations and for giving them predictable policy environments is to establish long-term policy and regulatory frameworks. So it's important that Lithuania is setting the right level of ambition through its climate agenda. But now it's important that it sticks to this ambition, implements an effective policy mix, and sets up a coherent institutional framework to design policies and evaluate progress. Additionally, because Lithuania receives significant amount of funding from EU sources, it is important that it increases its absorptive capacity and spending efficiency of public funds. On the one hand, what would be important is for Lithuania to develop its capacity to identify sustainable activities, including in the agriculture sector, and be able to disperse the funds to the right projects at the right level of valuation, and et cetera. And we see that already there's an initiative to set up an institution like a green sustainable finance institution for Lithuania that will help to coordinate and provide the information and the know-how on how to provide financing for sustainable activities. On the spending efficiency also, what we've seen is that Lithuania has used, for instance, financial instruments for different decarbonization projects, and the use of these instruments increases spending efficiency of EU structural funds, and this will encourage the expansion of their use to that end. Also, building investment-ready and bankable project pipelines will help investors see and understand the scale of the challenge and of the investment needs, and because they won't, really build capacity that is costly for a one-off project. It is important for them to have a set of projects that they can follow up on. And therefore, having project pipelines could be useful in drawing in investments. Lastly, engaging subnational authorities is important. In Lithuania, local governments are quite constrained in the way they spend their financing, their funds, and therefore maybe pooling their services and also financial capabilities will help them raise funds in international markets and therefore scale up their investment in decarbonization. Next slide, please. So when it comes to private sector, unsurprisingly, Lithuania and the other two Baltic states are quite small. If we look at the left-hand side, I have the assets under management, so the bar on the right for institutional investors in the three Baltic states, and then the three other bars show the size of the bond and equity market in the three Baltic states, and we see that there is scope for expanding capital markets to be able to draw in institutional investors to these markets, and so what this would imply is that the policymakers can require mechanisms that influence incentives and behaviors in financial markets. This could include continuing the integration of Baltic capital markets. This is something that is undergoing, and progress in this direction is welcomed. Another requirement could be to demand green mandates and clarify the fiduciary duty with respect to climate risk. We see that in Lithuania, green bond issuance as a percentage of the GDP is quite low compared to other countries, and so there is scope for further use of these instruments to finance decarbonization projects. Next slide, please. So when it comes to new technologies, there is definitely, a risk or uncertainty with respect to, the return that you can get on these technologies, and so that private actors could be hesitant to place their capital in such projects. And so there is a role for the public sector to try to take up some of the risk from private parties and to render some investments more attractive. And so we underscore the importance of an appropriate allocation of risk between public and private parties to develop suitable financing channels, vehicles, and risk mitigation instruments, while considering risks across the asset lifecycle and tailoring the risk sharing mechanisms to investor preferences. Next slide, please. And one project that we think really exemplifies the good efforts that have been put in place in Lithuania is the Jessica program that is related to renovating the multi-apartment buildings. And why I mentioned this here is that this program spanned over 2 programming periods. So it started actually in 2007 and a second iteration of this program undertook in over the period, the preceding programming period, 2014-2020. And we see that the evolution of the program towards a more sophisticated financing scheme has required the development of technical expertise and administrative capacity to evaluate and implement projects. And so we see that it takes time actually to reach a bit of financial, to build the financial infrastructure and know-how to support low carbon projects. And so I think there could be good takeaways from this experience. And in the report, we give you, a bit of details on lessons learned from this. And I think there are some, so I think it goes to show that it is important to develop the capacity to conduct such projects over time. And with this, I end my presentation. Thank you.
Thanks so much, Asia. And so I think, from all of these things together, I hope that you can see that as an OECD project, what we've really tried to do is sort of to look at decarbonization from all different lenses and to really try and understand what the landscape is like in Lithuania, and also how different aspects of that landscape might need to change or could change in the future. But to sort of end with some broad recommendations and sort of policy conclusions, I think the sort of really key part of our sort of analysis for agriculture is that increasing prices on specifically non-CO2 emissions would incentivize more stringent emissions reductions in a hard to abate sector. The climate policy mix for agriculture and forestry is already very comprehensive in Lithuania, and the combination of pretty generous financial incentives and complementary measures such as education and capacity building, sort of that is well in line with other good practices from around the OECD as far as a policy framework for agriculture and forestry is concerned. But at the same time, enhancing carbon sinks is key to reaching net zero. And here, historical trends of declining carbon removals need to be reversed. And these trends are really due to more intensive forest product use, or more intensive forest management. So in the forestry sector, really not only enhancing forest cover, but also the way that forests are managed so that they can be sustainable and act as stronger carbon sinks is key. And in addition to that, introducing an ETS or a carbon price on emissions in the agricultural sector, specifically for sort of non-CO2 emissions, would be quite helpful on top of the financial incentives that are already available to adopt sustainable farming practices, incentivize further emissions reductions in this very hard to abate sector. And that's why these sort of policy levers are necessary here. Because these are emissions that are difficult to get rid of, and mitigation policies exist and are being developed, but this is sort of agriculture remains a difficult sector in this sense, and that's why also again enhancing carbon sinks and the sort of sink potential of agriculture is really key. So with that, I'd like to end my presentation, and here's some references, but broadly, what I'd like to do now is, open the floor up to questions from your part. And what we're really interested in here is, first of all, given, we've presented for quite a while now, and about an hour, and given everything that you've heard for our presentation, what are your key insights and takeaways? What do you think really stood out for you as the sort of experts for the agriculture and forestry sector in Lithuania? But then also, what might we have missed? We're not going to sit here and say we've done all of the work that needs to be done and we know everything there is to know. So I'm sure that there are aspects that we've missed, and as we're still drafting the report, it would be really interesting to hear from you what your opinions on that might be. And so with that, I also wanted to thank the speakers again, Dirk and Asia, and we look forward to your questions.
Okay, well, thank you very much for such a thorough presentation of all the results and including our sector, the agriculture and forestry. And I will switch to Lithuanian now. So,
please now, the floor is now open to the discussion. You can raise your questions, raise your hands if you have a question, if you have a remark. Before you ask questions, I will probably ask my first question. From this discussion, from this presentation, what I've heard, I have this general question. You were presenting for an hour, as you said, and then you concluded your presentation with policy recommendations. If you had to make a summary of the main takeaways, of the main message for Lithuania, for the ministry as a decision maker, and what could be the main key takeaways for the sector, for the farmers, for the producers?
So I would say that the key sort of takeaway for the farmers, producers in Lithuania is that there are mitigation options out there. We don't do a comprehensive review of all mitigation options in the agricultural sector, and there's far better and more experienced agricultural experts doing that kind of work, also at the OECD. But there are mitigation options out there, so it's really a question of, first of all, adopting those mitigation options wherever possible, and ensuring that the sort of incentive structures exist to enable farmers to do that. And I know that Lithuania's climate policy, as it already stands in the NECP, is already pretty good at doing that. There's financial incentives available, but we feel that if more could be done through, for example, expanding carbon or emissions pricing to non-CO2 emissions in the agricultural sector, perhaps through at first a low level and through a pilot program similar to the New Zealand case. Asia, you had something to contribute?
Yeah, I think again, a message that we should try to really convey is that there is a need for technology diffusion in agriculture. This is undeniable, but of course, financing is always a constraint. I think agriculture, especially small farmers, are going to be very financially constrained and maybe cannot undertake the investments needed to reduce their emissions or render their activities a bit more efficient. So there is scope for the public sector to step in and try to identify ways to pull together investment projects, to try to de-risk some of the investment, so to lower the cost for farmers, financing cost for farmers. And also when it comes to, for instance, fossil fuel subsidies, for us, what is important is that, okay, you want to provide support for vulnerable and also strategic sectors, agriculture included, but perhaps it shouldn't be linked to their fuel consumption, right? Perhaps there are other ways to design support in such a way that it incentivizes energy or efficiency improvements, and does not necessarily cause excess consumption of emission-intensive fuels.
Zygma, прошу.
Zygmas, please. Introduce yourself, please. Hello. Thank you very much. I am Zygmas from the Ministry of Agriculture. Thank you very much for your insights about the possibilities in the agriculture and forestry to reduce emissions. I really liked your insights when we talk about the importance of establishing the sustainable production methods. This is the direction which we can further continue, and it has a huge potential. Agriculture, as other sectors, have limited possibilities to reduce emissions, which leads to the fact that the range of possible measures or instruments of effective instruments, the range is limited. You are talking about CO2 pricing and other measures, but I think that these measures take the possibility from farmers to invest into new technologies, which could contribute to emission reductions. Therefore, I think we should be very cautious with these proposals related to increasing taxes. If the general tax burden increases on natural persons and legal persons, because it takes away the funds from the possibility to invest or to live in a dignified way. So if this balance between taxes has to exist, and I think it should be emphasized really very much. When we talk about the taxing or excise, for example, excise for excise duty for fuels, we see a two-way direction. Maybe first of all, we have to pool the efforts to establishing the norms of excise duty based on the most modern technologies. Here we have the possibility for farmers without additional costs, but only by merely using more sustainable technologies to avoid additional cost. And another step could be in the future, we could talk about increasing the excise duty as a necessity. On the other hand, you talked about the New Zealand's experience in and taxing livestock. In Lithuania, this sector, livestock sector, it has been shrinking, and we have a huge problem that crop farms have become dependent on synthetic fertilizers. Previously, historically, we would use manure to fertilize, and now it has become very much reliant on synthetic fertilizers. Actually, manure produces a lot of methane and other greenhouse gases, and synthetic fertilizers is a possibility, and it can be actually used for it has other possibilities. So we have to see a balance, like a healthy balance, to calculate, let's say, the balance between the damage to climate when using synthetic fertilizers and and the benefit of using them. So we have to have this healthy attitude towards the use of fertilizers. That will be my main insights regarding your presentation. Thank you.
Zygmas, thanks so much, and thanks for pointing out perhaps something that came a little bit short in our presentation, which is the key need to consider, if we're going to recommend pricing, also, what pricing could impact, the way that pricing could impact the individuals and the farmers involved in this. And obviously, there's two aspects of this that I think are really important to stress, and there's good practice insights from perhaps other sectors, but from around the OECD. And one is that, increasing prices on excise duties or introducing carbon taxes or similar increases government revenues. That means that there's money to spend that can be recycled back to households or recycled back to businesses or invested in ways. And as part of this project, the Employment, Labour and Social Affairs Directorate is actually carrying out a modeling study to look at sort of economy-wide decarbonization policy pathways and the way that they influence household income, specifically in distributional policies, to be able to sort of enhance their progressive effect. And the sort of headline result that I've been sort of communicated so far from this modeling is that progressive results are possible. That means, results where the most vulnerable and poorest households don't suffer disproportionately. However, regrettably, the results aren't quite ready to be shared yet. So you'll have to be patient and wait for the final report to come out. And then I think the other thing that you mentioned on the sort of need to consider, but the pros and cons of using synthetic fertilizers here, I think the New Zealand example is really key. I mean, it's clear that synthetic fertilizers have, there's a potential for emissions reductions here in fertilizer use, and there's, this is one area where technology innovation can play a huge role in trying to make the emissions intensity of fertilizers bring it down, and also look at farming practices that are less fertilizer intensive. And I think that one key thing to note is that, as you said, increasing prices also limits the availability of funds that farmers might have to invest in technology adoption. But that's where ASEA's sort of presentation on the role of the public sector in really funding technology adoption and enabling these sort of technologies to come to market and to really be used is key. And that's why government has a really key role to play here. And we can't just leave it up to implementing a price and then that's all. But we really need to consider both how to recycle the revenues, but also how to sort of strengthen technology adoption through targeted policy and financial policy. So thanks you for bringing those up, and those are really key aspects.
Ačiū. Ir tada gal pratęsiant tiesiog tą temą apie
So
carbon.
just to continue the topic of carbon pricing. As I understand, the New Zealand it has just recently announced its preliminary plan of how they're going to implement this process. I just wanted to ask you additionally, are there any other examples where countries go on this path? This is one of your main recommendations, like pricing other greenhouse gases other than CO2. But if we don't have any like effective examples from the world, what would be your recommendations for us to start? How we should start to use this instrument, this measure?
Hi, thanks so much. So the New Zealand case is indeed a sort of first of its kind, as far as we're aware at the OECD, and so you're right that there is a sort of issue here that this is a policy area that hasn't necessarily been touched upon by other countries. But that said, with all of these things, you need first movers, and some New Zealand's taking the plunge, and there will be important lessons learned from that. And as an OECD country, there is analysis going on, and there will be probably a lot of analysis within New Zealand as well that lessons can be drawn from. And I think otherwise, one sort of key aspect, and it's not a sort of it doesn't speak to the non-CO2 emissions, but there are plenty of examples of fossil fuel subsidy reforms affecting sort of specifically fuel use, and also in agricultural sectors. So those are examples where in the agricultural sector there are good practices from around the world. But I do also think that the climate policy does bring you to the frontier of policy options, and at some point new policy frameworks need to be developed to be able to target, for example, non-CO2 emissions, and that's really something where any country willing to test a pilot of a trading system or something similar for example methane emissions, that's a welcome contribution, not just to that country's emissions reductions, but also globally, because we need examples and experiences to draw lessons from. And so that's something to be promoted for sure.
And to maybe add to what Kilian just said, one thing to highlight about the New Zealand example is that the agricultural associations in the country are very much on board with that, and involved in coming up with this plan, indicating that equity, thinking of equity, or what to do with revenue recycling is very much part of the New Zealand story there. So that's an important thing to look at. Also to and that was more or less also an answer to Sigmar's question earlier. And to answer your question, Christina, there are plenty of examples of fertilizer taxes around. I don't have them handy right now, but I'd be happy to look them up, maybe even put them in the report if you think that's useful for you.
Yeah, that would be definitely useful. Thank you. Okay, so turim daugiau rankų, tai Elžbieta, prašau.
We see more hands. Elžbieta, please. Hello, I'm Elžbieta Germanovich from Smart Continent. I have an observation. Speaking of pricing, fertilizer pricing, especially of mineral fertilizers, thinking of such models, we should also think at the same time about the baseline, what will be taxed if if we tax the consumed fertilizers. So we should probably think about the accounting of fertilizers and controlling the amounts of fertilizers, so that the actual used amount of fertilizer should be taxed. So the control of the actual amounts, the accounting of the fertilizers used, should be taken into consideration.
Hi, Elisabetta. Thanks so much. I think you bring up a really important point here that's goes perhaps a little bit beyond the scope of our analysis specifically, but again, sort of drawing on the New Zealand example. I think in New Zealand, the way that the proposed sort of fertilizer, the integration of fertilizer within the broader emissions trading scheme within New Zealand will, as far as I understand it, work at a producer and import level. So not at a farm level on fertilizer use, but actually taxing sort of the producers of fertilizers or the importers of fertilizers. And then, through sort of by extension, those prices will sort of have an impact also on use. I think what's key here is, building accounting systems is absolutely necessary wherever you price, at whatever level. And, I think the New Zealand example, not for fertilizer, but for pricing sort of methane emissions at farm level, is really key there to say, let's have a transitionary period where we really focus on building up capacities for accounting. And I think that's a key lesson to be learned. Also, Asia mentioned it in the sort of financial needs assessment, that pilot or programs that we can draw experience from. One of the highlighted sort of recommendations is these things take time to get used to, and capacities need to be built up. So it's not something that we can, where we can plan a policy framework and implement it and tomorrow it works, but rather this is a long process where you need to get stakeholders on board, and build capacities and really think about also how this works best in a local context. And this is a sort of part of that process, talking about what policy options exist, and this sort of exchange between key stakeholders in each national context is going to be really key in designing further policies going forward.
Ačiū. Rimantai, prašau, prisistatykit irgi.
Rimantas, the floor is yours. Thank you. I wanted to thank you for the broad overview provided by the speakers. As far as I understand, you did not focus on negative CO2 emission methods. They were not included into your analysis. Don't you think that would be a mistake? Because new technologies, they do not only sequestrate CO2 emission through biomass, but also help solve the soil productivity problem when we refuse to use synthetic fertilizer. Sorry, I forgot to introduce myself. I'm Director of Business Innovation and Cannabis farming. Why am I speaking about cannabis? All the plants that have quick photosynthesis, they also produce biomass, and this biomass could be successfully used for CO2 sequestration, especially for long-term sequestration. This is why our suggestion would be to focus more on biochar. Biochar is an ecological fertilizer, organic fertilizer, and we could support its production and provide dotations for those who use it. And this would allow us to ensure a faster transition to green farming in agriculture. And just like Zigmas mentioned, agriculture is a specific sector, and the specific nature of the agricultural sector does not allow us to ensure quick transition to net zero situation. This is why the negative CO2 emission technologies would help us balance out some of the things. What would be your opinion about that? Thank you.
Thanks so much, Rimantas. And very interesting, your field of work specifically. I personally am not a biochar expert, but it does crop up. But what I do know is that you're completely right in saying that negative emissions and enhancing emission sink is key, not just in Lithuania but worldwide. And I think our modeling, sort of historical emissions, first of all, show that the trends there in Lithuania are a little worrying. The sink capacity used to be much higher, and over the last sort of 10 years, this has decreased. But the fact that the sink capacity was once higher is also a sign that there's sort of room for maneuvering and enhancing that, because it's not that long ago that Lithuania removed far more CO2 or greenhouse gases than it does currently. And I think sort of from our analysis, which isn't very detailed in this sort of area, what we can see is that For example, policies to sort of enhance wetland restoration and especially avoid the conversion of wetlands into agricultural lands is something that's been really key policies to sort of enhancing the sinks, at least within sort of Northern Europe. And that's something that, you know, OECD, especially also the Directorate for Trade and Agricultural, that they've done sort of work on. And I think that, you know, what I would be interested actually here is to ask you a sort of follow-up question on your sort of use of biochar as a means to enable sort of negative emissions or emissions removals. You know, what kind of framework conditions do you need to be able to scale up that to actually have an emissions reduction impact? You know, this is we spoke a lot about, you know, the need for sort of policy frameworks to enable financing for the adoption of new technologies and all of this. What do you see as the key barriers to things like biochar or other sort of new technologies in the agricultural sector? What do you see as the key barriers to those being implemented at a scale necessary? After all, you, especially in the Lithuanian context, are far more experienced than we are.
This is a rather new technology. First of all, we only know about the theoretical part of this technology based on the good practice of other countries, but there are two evident things. First of all, biochar can be produced on a farm level with very simple measures applied. And it would be really good to have the legal framework allowing to do it, because it entails certain emissions, but it produces a wonderful effect of CO2 sequestration. And this effect is much higher and greater than the damage. Yet another thing is that those technologies are rather expensive, but they do allow developing new type of production in rural areas, and under the regional development framework, we could provide dotations or subsidies for farms to acquire modern equipment that would allow us to capture carbon on the farm level. And farmers could also form cooperatives, and they could benefit from this technology. But for that, we need certain financial mechanisms to be introduced in order to allow for farmer cooperatives to form and to benefit from that. And in general, biochar as a technology allows us to lock or to capture carbon for 15,000 years, and nitrogen oxide can be reduced up to 60%, and at the same time we could even have a greater harvest, a bigger harvest. And from the economical point of view, this is extremely important, and this should be supported both from the economic point of view in order to keep the productivity of our farmers on the way to the green course. And this would also help us solve some decarbonization issues. So that would be my comment in reply to your question.
Great, thanks so much for those insights. And for me at least, and I think for us as a team, they're a nice sort of affirmation of the fact that we're not completely moving in or working in the wrong direction, and that sort of our recommendations that to enable sort of good technology innovation and adoption, you need good financial frameworks and capacity building for that. You know, that those sort of recommendations ring true also from your perspective. So thank you very much for those insights.
Tai ačiū. Jeigu kas dar turi klausimų, tai kelkite rankas.
Thank you very much. Are there any other questions? If there are, please raise your hand. And meanwhile, I would like to thank Rimantas and to thank Kilian for drawing our attention to carbon capture, to negative emissions, because I was about to ask a similar question, but you already discussed it without me even asking it. And what concerns technological innovations, I would like just to reiterate by saying that it is interesting for me to hear that technological innovations seem to be one of the key directions and key areas for further investment, and that we need to focus more on that. This would help us to move further on along the path of decarbonization. I noted this down for myself regarding investment in new technologies and other things. I will soon provide Dalia with an opportunity to talk, but I also wanted to draw attention to one more thing. In your initial slides, you mentioned some of the changes that will happen in the future. You spoke about other renewable sources that will go down, especially biomass. Biomass makes up quite a big part of renewables in Lithuania. Could you please explain a little bit more? Why do you think biomass will go down? Will sun and wind power dominate instead?
So specifically to those modeling results, the use of biomass here is in the sort of heat sector. And I think the key insight here is that because the model assumes that renewable energy costs continue decreasing, at some point renewable energy becomes more cost effective than using biomass for heat. And so in the model, given that it's sort of a simplified general equilibrium model, the model then prefers the cheaper option of producing power. And so that's why we, in the long term, we then at some point, once renewable capacity is high enough and cheap enough, we actually see it displacing biomass as well. Now, that's just what the model gives you as far as cost effectiveness. There's also a case to be made that biomass shouldn't be relied on exclusively in the energy sector, because both the EU frameworks call for a gradual reduction of biomass use, particularly because there are sustainability concerns depending on where the biomass is sourced and etc. So if there's a more cost-effective alternative, i.e. in wind or solar energy, this is something to be preferred over biomass use.
Ačiū. Dalia, prašau.
Thank you. Dalia, the floor is yours. Thank you. First of all, I would like to thank you for the presentation, for all the insights that you shared with us. I do understand that the model was developed without knowing about the recent geopolitical situation, meaning that no one knew that it will happen the way it happened in the neighboring countries. And this geopolitical situation in Lithuania and in our neighboring countries is very different from the rest of the world, especially in terms of energy prices. And that tells on further development on renewables. This is why I would like to ask about competitiveness. Current energy prices vary a lot in EU member states. For example, Lithuania might set certain CO2 price, and then it results in certain tension in terms of competitiveness, because our agricultural products, they do compete on the European market, on the EU market, and additional pricings would tell negatively on our competitiveness on the EU level. What concerns greenhouse gases and CO2, monitoring GHG and CO2 is extremely important in Lithuania, and I'm sure that it should be done on the farm level as well. And then when it's done, the farmers would know the key sources of emissions and then would be able to take decisions to reduce them based on the monitoring results. And certainly innovations would help a lot in that respect. I think that the key indicator should be the fact how much €1 allows us to reduce the amount of greenhouse gases emitted, methane emitted, or anything else emitted. I would think that this would allow us to start calculating more, to start reducing the emissions on the farm level. Thank you very much.
Hi, Dalia. Thank you so much for your questions and comments. So agreed that competitiveness concerns are there are competitive concerns to be had when considering pricing options. Again, here there's there's far better and more detailed research specifically on sort of the impact of carbon pricing on competitiveness. I think what's sort of key to understand or to sort of think about here is, that's not something that we carry out specifically for the agricultural sector in Lithuania, but any kind of policy framework that is proposed should definitely have some kind of analysis specifically of that policy framework on the Lithuanian context as far as competitiveness is concerned, and also really consider, as you say, sort of what is the actual cost effectiveness of various different pricing options. So that in our modeling, we use general marginal abatement cost curves that are available in the literature, but they're not, context specific to Lithuania, and also we don't have a detailed agricultural sort of sector model at play here. So we're really talking about sort of general impacts. I thought that your sort of comments on monitoring, if I understood them correctly, were really key as well, and I don't think that any of these sort of schemes can work without a stringent accounting and monitoring system in place. So if that's something that from sort of your perspective needs to be worked on, then that's, I think that's a key insight also for us and for policymakers in Lithuania, that monitoring emissions in the agricultural sector specifically is something that could be enhanced. Asia, you had something to say as well.
Yeah, I think to answer the competitiveness issue, we do look into trade impacts of the policy scenarios we suggest. And we see that for agriculture, but this is because we only price CO2 emissions, trade impacts on exports in the sector are quite limited. And we also look into a scenario on a gas ban due to the geopolitical situation. And there we see that to 2030, there are significant impacts on output in the economy. So yeah, so we do have results on this issue.
True. Asia, thank you so much actually for reminding me. As you are mentioning the geopolitical situation, Dalia, I was thinking about the fact that actually we do modeling on this, and then I completely forgot to mention it in my answer. But yes, so we didn't present it here because we wanted to focus on the agricultural sector, but in the report, when it's ready, there is also a sort of section that considers the effect of sort of a complete ban of all imports on Russian fossil fuels. Not just in Lithuania, but in a number of, or pretty much, a lot of the largest countries in the world, and then imitating what Lithuania has already implemented. And we do see that the sort of economic costs of this are a little higher than if you just have normal climate policy, but there's pretty strong climate policy co-benefits. So emissions reduce much faster, and carbon prices are actually also much lower as a result. So if this is something you're interested in, please, once the report is ready, have a look, because there is some insights on that there.
Ačiū labai. Tai aš daugiau rankų nematau.
Thank you very much. I don't see any other hands. Those of you who are willing to ask a question, please do it now. If not, then we can call it a day already. I would like to once again extend my sincere thanks for your presentations. Thank you for all your contributions. We are looking forward to the final report. We will read it with pleasure, and we will take into account your advice and all what you want to say in various respects. We will not have any further meetings with this sector, agriculture and forestry sector, but we will certainly share the final report with this group too. Thank you very much once again for today's contribution. And what concerns the overall process with the project, after our previous meeting, we took into account all your comments, and we are now discussing the scope measures and the modeling measures. And I'm not sure when our next meeting will take place, but once we know the exact day, we will share it with you. And we will invite you to hear our opinion about the process and our plans for the future. You will receive respective information by email. Thank you very much once again. It was a very interesting meeting, and the recording of the meeting exists. You will be able to look through it later on as well. Thank you very much. Have a good day.
Thank you so
Thanks
much
so
for having
much
us.
also from our part. Have a
Thank
great day.
you. Bye.
Bye-bye.
As well. Thank you very much. Have a good day.
Thank you so
Thanks
much
so
for having
much
us.
also from our part. Have a
Thank
great day.
you. Bye.
Bye-bye.